Investing in Welsh property. The tax rules are not what you expect, and the differences are costly. Did you know some Welsh councils can now charge you a 300% council tax premium on an empty home? And it's not just local policy. The UK government has also slashed your tax-free capital gains allowance. The entire tax system for Welsh property is shifting, from the day you buy to the day you sell. In the next few minutes, we'll break down the key Welsh tax distinctions and the latest bombshell changes. So, where to begin? First, when you buy property in Wales, you're not in the UK system anymore. You're in the Welsh system. In England, you pay stamp duty. But since 2018, Wales has its own land transaction tax, or LTT, with separate rules and rates. For investors, this is vital. Buying an additional property means higher LTT rates, which were recently increased to manage the housing market. And unlike England, Wales offers no specific first-time buyer relief. This fundamentally changes entry-level market calculations. The takeaway is clear. Applying English tax assumptions to a Welsh deal is a costly mistake from day one. Once you own the property, how is your rental profit taxed? Here, the rules have changed dramatically across the UK. Landlords used to deduct all mortgage interest from rental income. Since 2020, that deduction is gone. You cannot claim it as a direct expense. Instead, you get a 20% tax credit on interest payments. For higher-rate taxpayers, this means a bigger tax bill. But an even bigger change could be coming from Wales itself. This makes claiming every single allowable expense absolutely necessary. We're talking agent fees, insurance, repairs, and bills during void periods. To see how radically the rules can shift, look at the recent abolition of the furnished holiday let regime. From April 2025, the FHL tax system is gone. Holiday lets are now treated just like standard buy-to-let properties. This means their mortgage interest relief is now restricted to that 20% tax credit we just discussed. And valuable capital gains reliefs, like business asset disposal relief, are also gone, meaning a much higher tax bill when you sell. The FHL abolition wiped out benefits overnight, proving the risk in the system. So how do you structure your investments for resilience? This brings us to a major strategic decision. Owning property personally versus through a limited company. Remember that shrinking personal CGT allowance? If a limited company sells a property, it pays corporation tax on the gain, which can be a much lower rate. But this strategy has other implications, especially for inheritance tax. HMRC classifies buy-to-let portfolios as investments, not trading businesses. This means your property portfolio typically won't qualify for business property relief, a key exemption from inheritance tax. Planning for this is paramount, and for developers, there's another hidden cost: VAT. On new commercial builds, it can be a huge, unexpected expense if not structured correctly. Okay, we've covered Welsh distinctions, UK-wide changes, and corporate structures. Now, let's connect the dots and look at what's next. I mentioned a bigger change coming from Wales. Here it is. The Senedd is already proposing its own separate rates of property income tax. Just as they did with LTT, Wales could soon have entirely different income tax rates for landlords. This is the next phase of tax devolution. At the same time, HMRC is tightening its grip. From 2026, making tax digital requires quarterly reporting, making that expense tracking a legal necessity. So you have pressure from all sides. A Welsh government creating unique taxes, local councils imposing 300% penalties, and HMRC demanding more compliance. The conclusion is undeniable. General UK tax advice is no longer enough for the Welsh property market. It can be actively damaging. Understanding these differences isn't about saving a little money. It is about protecting the fundamental viability of your investments. This video is just the start. We've compiled all the details you need into one definitive place online. Our online complete guide to property taxes for Welsh investors breaks down every tax with worked examples and strategic advice. Stop guessing and start planning with confidence. Click the link in the description below to access the full information right now. Don't let a tax mistake derail your Welsh property goals. Get the correct information